Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. It is Friday, October 10th, and you are tuned into the Friday Chart Fix. Thank you very much for joining us. So today we're going to start off with the Qs because the Qs are in a steady uptrend, and we've got a nice tight rising channel, and I'll show you the key levels to watch that would signal we may be moving into a corrective phase. No signal yet though. Even though the Qs are leading and strength is in technology mostly, there is strength outside of technology. And I'm going to show a perf chart that's going to show 5 healthcare stocks that are outperforming 6 of the 7 Mag 7 stocks. Then we're going to look at a case study on a flag within an uptrend, a breakout, and a trailing stop applied to the robotics and AI ETF. And from that case study, we're going to apply those lessons to the current wedge breakout in Microsoft. Let's hit the charts. So here is QQQ, and I want to start off with the sequence where we move from a downtrend to an uptrend and what happened after that initial uptrend signal. First of all, we had this downtrend signal in March. We clearly broke support levels. We broke the 200-day moving average, and that was a signal that the trend had turned down. So we got a little bit of a bounce, then we got the plunge into April, and then we got the surge off of those April lows. And the signal first was the wide breadth thrust on April 24th, which was duly pointed out here on Trend Investor Pro. But as far as the trend change signal, that happened in mid-May, May 12th in particular, when you got this gap and this break above the 200-day. So you negated this breakdown in early March, you broke the 200-day, you had a breakaway gap there, or continuation actually, continuation from that February 24th thrust there. But what happened after this initial thrust was the trend slowed. And instead of going from a very sharp V reversal, we moved into a steady advance. So basically since mid-May, the Qs have been locked in a steady advance. And pullbacks have been very limited. They're short, weak, maybe less, and after each pullback, we move to a new high. There we have a short pullback and a move to a new high. Here in August, we had the longest consolidation since the big breakout, and it was a pennant. And then we got the pennant breakout and continued higher. We even had a little short 3-day pullback at the end of September, and then a move higher. So the key here is that all pullbacks are shallow, and after each pullback, we're getting a new high. And when that sequence stops, then that will be the signal that a correction is upon us. Now I say correction because if you look at where we're at, we hit a 52-week high this week. We're well above the rising 200-day. So, prices could correct to the 540, 550 area and still be in a long-term uptrend. But what would signal the possibility that we're moving into such a correction? Well, the first signal would be if we break out of this rising channel. As you can see, a clearly defined channel. We got almost 3 touches on that. Didn't quite touch it there, but there's clearly a channel rising there. And we got support here in that 580, 590 area. So if we break 580, we have broken that immediate uptrend of the rising channel. We've had the most selling pressure we've had basically since early April, or April with that decline there. And so that signals an increase in selling pressure and the start of a correction. Now, what might the correction look like? Nobody knows. Corrections are like a box of chocolate. You don't know what you're going to get. Well, these days they do have a little description, but that's beside the point. But corrections, you don't know if you're going to get a sharp pullback to the 200-day. You don't know if you're going to get a sideways trading range or something like a falling wedge. You just cross that bridge when and if it gets here. But for now, there are no signs of corrections because QQQ is clearly in that rising channel, and you get a pullback to 590, that might be an opportunity, a short-term pullback within that tight channel to partake. Now, if we look at the relative strength line, QQQ still shows relative strength. You had a relative breakout there in late April, early May, and continue to rise with 52-week highs in the relative strength line in September, October. So no problems there. So that means as far as looking for individual stock setups, we still want to have the NASDAQ 100, the technology sector, and the Mag 7 on our list. So I've got the NASDAQ 100, the technology sector, and the Mag 7 stocks. They are on my list. When I'm looking for setups, I include those groups. But I'm not excluding all other groups. I still like industrials, I still like utilities. But one group that came to the forefront over the past few weeks is healthcare. And we focused on healthcare last week because XLV had a big thrust higher and a big breakout. And that was bullish for the sector. And so those stocks are on my watch list. But there are healthcare stocks that have been leading the market before that breakout. In fact, if you look at year-to-date performance here, we've got the Mag 7 stocks on the left. We've got NVIDIA first, and NVIDIA is up 43.4% year-to-date. It's the leader in this group. And then you can see the other leaders would be Meta Platforms, Microsoft, and Alphabet. They're up between 24 and 28%, roughly similar performance. So these three are performing good enough. They are outperforming the broader market. The laggards within the Mag 7, that would be Apple up 1.5%, Tesla, and Amazon. And all three of these are up less than 10%. But what really caught my eye here is you look at these three, Meta, Microsoft, and Alphabet, and then you look at some of the healthcare stocks. Johnson & Johnson, I mean, how old is that stock? It's been around a long time. Johnson & Johnson is outperforming these three stocks this year. Elsewhere, you can see AbbVie is up 30%. We got Cardinal Health, McKesson, and Cencora up more. And they are up more than these other six Mag 7 stocks, if you will. And there are also pockets of strength within healthcare, so we can't ignore that sector. And healthcare is also good because it gives you some balance to your portfolio. You don't want to be all in on tech because there's a high correlation between tech, even though some of those correlations have broken down. But in general, you want exposure outside of tech. And so that's why healthcare and utilities also are an option because that sector is also showing strength. So at Trend Investor Pro, we do focus on pullbacks within uptrends. And this week we did highlight tradable setups in Cencora and Cardinal Health. So here is the main analysis page at Trend Investor Pro. This is where I do the chart analysis, and each report does include a video to offer more details and color into the analysis and the method behind the mad list. You can see a list of all the premium services that we do offer. And there's also a getting started page that I'll show you in a minute here. But if we look at some of the reports that we had this week, we've been following gold and metals since, we follow them on a regular basis, but we had setups on these in late August and breakouts in late August and early September. So these run-ups that you're seeing now, well, the setups were back in August, and that's when you had to be focused on them. And right now, we're just managing those setups by using some chandelier exits to identify when we might get an outsized decline that could destabilize these uptrends. I also highlighted 7 stocks, semiconductors, cybersecurity, even a consumer staple, and 4 healthcare stocks, including biotechnology. And we also cover ETFs on a regular basis. We featured industrials, utilities, and tech, also healthcare, as I said, because those are my 4 top sectors right now and where I'm looking for potential setups. So check out TrendInvestorPro.com if you want to learn more. And I also mentioned this getting started page. That's open to anybody. You can go on that page to see an introductory video that explains the services at TrendInvestorPro.com. So now I want to show you a case study using ARTY, the Robotics and AI ETF, because this is what we specialize in at Trend Investor Pro. I'm looking for strong uptrends, I'm looking for relative strength, and I'm looking for pullbacks and oversold conditions within those uptrends as opportunities. And if you look at ARTY, it had the big breakout with the rest of the market in May. You had a small pullback, but then just this huge surge in June, July. And then you get the falling flag. So we're in a long-term uptrend, we're showing relative strength, and we get a falling flag. Not only that, but if you look at the bottom window, percent B was oversold. And percent B is a good indicator to use for scans. If you want to look for a stock that is above its 200-day, its 200-day is rising, and then percent B is below zero. Because when percent B goes below zero, that means the close was below the lower Bollinger Band. And if you're in an uptrend, that means you had a pullback within that uptrend. And a pullback means you have a potential opportunity to trade at a lower price and catch a ride on that uptrend. So that was the setup there. You're oversold, and then you can draw some lines and see a flag. Now, what the flag also does is it gives you a signal level to watch to signal that the flag is falling. So that's a short-term downtrend. And so you need a signal to suggest that that short-term downtrend is reversed. And we got that with the breakout in late August. And we put this in the August 26th report on TrendInvestorPro.com. So once you get the signal, you move into trade management. You consider an exit strategy. So when you first get the signal, I usually use the low of the flag as the first support level upon which to base the initial stop loss. And that was at 41. You can use the closing low or you can use the intraday low. That's a fielder's choice there. But you can see we did hold 41 on that little 2-day pullback, and then we surged into September. And so once you get that follow through on your flag breakout, you can consider another exit strategy. You can look at price action to identify a little reversal. You can say, hey, no, I'm in this for the long haul. I'm going to use a long-term trend signal. If the long-term trend reverses, I'm out. Or you can use a trailing stop. And trailing stops can either be tight or they can be wide. And in this example, I've got the chandelier exit 22.3. And so as this flag breakout extends and prices move higher, you can see that chandelier exit also moves higher. Why is that? Well, because it is based on the 22-day high. So as that 22-day high rises, the chandelier exit rises because it is always 3 ATR 22 values below the 22-day high. So ATR is it's a volatility indicator. So your 3 volatility measures below the 22-day high. And so that stop will rise. It's currently at 47.17. So if you break that, that signals that you've had a 3 ATR decline from the 22-day high. That's a pretty good decline. It's enough to say the uptrend has become unsteady. It doesn't reverse the long-term trend. It just says, hey, it's a stop mechanism. In other words, it's a way to control losses, to stop losses. And it's also a way to lock in profits if you've had a big gain. And once the exit triggers, you just move to the side and you look for the next setup, or you have some patience and wait for the next setup to emerge. So let's apply this strategy to Microsoft. First, we look at the trend. We look at the relative performance. We want both of those to be long-term bullish. Second, we wait for the setup. We look for a pullback within that long-term uptrend and an oversold condition. And then third, we look for the signal. And once we get the signal, we manage the trade with a stop loss. And so if we look at this chart here, we had this big breakaway gap here in May, and prices moved to new highs. So we hit a 52-week high here and then pulled back. And during this pullback, we're above the rising 200-day. So we're still in a long-term uptrend, no doubt about it. And if you look at the price relative, it started leading there in late April, early May, a little pullback in August, but long-term, I'm seeing relative strength. So it ticks the first box, long-term uptrend and relative strength. So what's the second box? The pullback. So we get the falling wedge on the price chart. And if you look at the indicator window, percent B got to 0. It didn't go below 0. You can see it just got to 0, but it doesn't go below 0. I call that moderately oversold. Truly oversold is when you go below 0. Sometimes you don't get the ideal setup. So if you get close enough to 0, you can say, hey, I need to be on alert because we've had a pullback. And if you're monitoring the price chart, you clearly see the falling wedge. And the falling wedge is just like a falling flag. It represents a short correction within the uptrend, a pullback within the uptrend, which is an opportunity. And also the falling wedge, like the flag, it gives you a level upon which to base a signal, a breakout. And you can see here, we got that break above the wedge line. We had a little high there from mid-September. We broke that. So when we got that breakout there, that was bullish. So when we get the breakout, we have the signal, we trigger, and we have to put an initial stop loss. And that is the low of the falling wedge. And so that was at 490. That was the initial stop. But then we continue higher into early October. And so now we have to consider adjusting our stop. Now you can trail it up. You can put it at 505 there based on that low from late September. Or you could use the chandelier exit 22.3, which is the pink line, and it's at 507.59. Now this is a short-term strategy, but the reason I use short-term strategies is because I'm trying to get in on a long-term uptrend. And you don't know when is a good getting on point. You know, if you look at the price action here since May, you would have said, oh my God, we're overbought at 420, but it never slowed down. And you didn't get a pullback in May, in June, or in July. And we just got our first pullback. So it does take some patience waiting for pullbacks, but they will come. And we do have whatever, 100 stocks in the NASDAQ 100, 500 in the S&P 500. So you can monitor those for long-term uptrends and percent B going below zero, which is what we're doing at TrendInvestorPro. But that is the key, I think, to if you want to build a long-term position, you look for signals. The first signal, of course, is that trend signal, the breakout. And then you look for those pullbacks within that uptrend to maybe accumulate a position. And if you're accumulating, you can use a wider stop loss. But if you're a short-term trader, you'd use a tighter stop loss like the 22.3. But in TrendInvestorPro, in the recent commentaries, we've highlighted the difference between the tight and the wide trailing stop using that chandelier exit. So check it out if you want to know more. All right, so that is a wrap. Just to recap, we're still in a bull market. Our market regime page shows that the three breadth models are bullish. The long-term trends are up for the major index ETFs. Yeah, maybe we're right for a correction, but SPY and QQQ are still holding within those tight rising channels. So we don't see any signs of a correction yet for SPY and QQQ. We're still liking industrials, utilities, technology, and healthcare, our preferred sectors. We're looking for setups within those sectors. So keep that flag and falling wedge strategy in mind if you're looking to catch a ride on an existing uptrend. Thanks very much for tuning into this video. Have a great weekend and hook 'em.